Hey folks, Simon here with your Tao Daily for market close as of Friday, the 11th of April 2025. Another reasonably volatile session on the markets on Friday. The S&P is closing up just shy of 2%. The Nasdaq up a similar amount, about 1.9%. We did have an early swoon that was recovered when the FT reported that Fed President Collins, the Boston Fed, said the Fed would absolutely be prepared to help stabilize financial markets if conditions became disorderly. So that was music to the market's ears, which saw losses become gains. And look, markets closed up nearly 2%. Now, on any normal day, a 1.8% up day is seriously positive. In the environment we're in at the moment, it feels like a pretty small move, doesn't it? Still, we normally had a higher high and a higher low on the S&P 500 today. I mean, obviously the previous day was an inside day, and we are still trading well within Wednesday's massive volatile swing where the S&P finished up 10.5%. So really and truly, and I think until we break above this 50% retracement level, or potentially below these lows, we're still in for a pretty choppy environment. Volatility is still juiced up. The IV percentile for the S&P 500 is still 98%. What that means is implied volatility is higher now than it has been for 98% of the time over the past year. So I'm still focusing very much on trading option spreads, selling spreads where there's a bullish or a bearish tilt, and where volatility is rich and worthy of being sold. Gold made yet another new all-time high today. Strong move up in the yellow metal. Part of this is sort of dollar weakness. If you look at the US dollar, this has just been absolutely tanking. Dollar weakness is causing a lot of confusion. I did write a thread on this on Twitter last week. So if you want a refresh on dollar weakness, why the dollar's been getting smoked, check that out. But essentially, the US this time round is actually the source of the risk rather than the source of stability. And of course, from a more mechanical perspective, if you think of tariffs as something that reduces global trade, if that means foreign exporters to the US, they'll be earning less US dollar revenue. There'll be fewer US dollars to recycle back into things like US treasuries and US equities. All of that leads to a decline in demand for dollars. Now, normally a fall in the dollar kind of is perceived as risk on, but when the US is the source of that risk, you don't take those correlations so literally. That's what I got for you today. I hope it helps, and I hope you have a wonderful weekend. I'll catch you next week.